I would like to evaluate first quarter results of BİM. It's the leading food retailer in Turkey. I just want to summarize the implications of the results in first quarter. First of all, Turkey is in a transition period regarding inflation accounting, and some companies are sharing pre-inflation accounting numbers and post-inflation numbers, inflation accounting numbers. Some of them are only sharing post-inflation accounting 29 standards numbers. It's difficult to make comparisons, but in BİM's case, they're openly sharing pre numbers and the post numbers. So we can see the impact of the inflation accounting on their numbers. I would like to thank BİM at the at the beginning of my comments, because it gives us clarity, transparency, and to better understand the companies in times of high inflation. I hope the inflation will come down by 2026. I hope. Then we might not need inflation accounting, but for the following 2-3 years, we will need inflation accounting. So just we need to make comparisons. So if I come to BİM's results, I can say that as a leading food retailer, they realized 95% top line growth in nominal terms, which is, the pre-inflation accounting numbers. But when we look at the real growth, which means we are taking the inflation into account, it comes down to 17%, which is also a reasonable growth. And it shows that BİM is gaining market share, and their operations are going well. So it's a good indication because they are the largest hard discounter, and they have efficiency advantages. Overall, when we look at margins, we again look in pre-inflation accounting and post-inflation accounting. But for comparison purposes, we need to look the pre-inflation accounting numbers. And I see 7.6% EBITDA margin versus our estimate of 6.7%. So it's better than our estimate, mainly due to higher than expected gross margin and some impact of lower OPEX compared to what we thought, because the labor cost was high, but they cut other costs such as utilities and other additional costs. So they had a very good picture in terms of managing the cost. So when we look at the post-inflation numbers, EBITDA comes down to 4.3%. But when you look at the inflation accounting financials, you need to take the monetary gain into consideration. So with that number, you need to make some adjustments. So it's for now, at least, as long as the company shares the pre-inflation accounting, the historical numbers, we will have a room for analyzing better, at least for the following 2-3 quarters. If they go like this, we will have better comparison. But I would like to underline that they had a good growth in first quarter, 95% in nominal terms. And their guidance for the full year is around 70 to 80% growth, nominal growth. And they have a EBITDA guidance of 7.5 to 8% guidance, which shows that the first quarter's 7.6% EBITDA margin is supporting the guidance. So going forward, the pace of top line growth will decline in line with the declining inflation. But overall, it looks like there's an upside risk to their EBITDA margin guidance, and even in the nominal terms in top line and the EBITDA level. So when we look at these numbers, we like the results. And again, when you look at the inflation accounting numbers, you see some additional impacts like deferred tax expense income. So when you look at numbers, the post-inflation accounting net income is a little bit lower compared to pre-inflation accounting, but it could be explained by the deferred tax expenses. So Just in our report, you will see the details. But overall, I can say that everything is intact for the biggest food retailer, Turkey, and the results are giving encouraging signal for the future. In the second half of the year, whether the government will increase the minimum wage or not is a key question. But the government is very, willing to not to increase because of the fighting with the inflation. So that's one of the macro prudential, the dedication of the government. So we can say that in the second half of the year, cost effects will be less. But on the other hand, we are going to see the impact on the consumer behavior, because if you don't increase the minimum wage, which means people have less room for spending in times of high inflation. So it's a tricky question for Turkey. But again, the food retailers, organized food retailers, are very much efficient in Turkey, and they can manage these turbulent times. So in this condition, we still favor the food retailer sector in Turkey, and the major players, BİM, Migros, and Şok, they're all in a good shape. But at this moment, although we like BİM as the leading and the very very low downside risk, we favor Şok markets because there's a higher reward for the current risk levels. BİM is trading at 1x EV sales, and Şok is trading at 0.28 times EV sales. So it shows that, okay, BİM is in a good shape, growing, but maybe Şok in the short term is like struggling to grow. But in any case, they're also efficient, and they are one of 4 big players. So going forward, we see that the company will take some actions, and I think it will be paying off. So clearly, we are evaluating our target price for the food retailers. That's for sure. We like all food retailers. BİM is always the most stable company in Turkey. But currently, because of the valuation and risk rewards, we continue to like or favor Şok at current pricing. This is my comments about BİM's first quarter. Again, there was no consensus number, unfortunately, because of the complexities in the calculations or guesstimating the numbers. But we are very much on top of it, and I think this video will help you to understand it better to some extent. But I recommend you to read our report and see the tables to have better comparison. So in times of hyperinflation period, we need to be much more concentrated and careful. But efficient companies will be in a better shape for sure. Thank you for watching. Have a wonderful day.